What's up, everybody? Today I'm going to be telling you guys the 5 things that I need to enter the market, and these things actually made me profitable and made me a better day trader and understand how the markets actually work instead of just following a strategy and being like, oh, yeah, the market does it because I'm following the strategy. The market follows price, the market is predictable, and you guys should know that if you're trading. And obviously, it's not 100%, but these are the 5 things that has helped me with trading. And with that, I'm throwing in a bonus one. I didn't think I was going to add it, but I did. So stick around to the end of the video for you guys to know what I what I gave you guys, or you can just skip to it. But now that I got the intro out of the way, we're going to hop into the video. I hope you guys enjoy. Happy holidays and Merry Christmas. What's up, everybody? Today's gonna be more of a chill video. It's gonna be short, it's gonna be sweet, it's gonna be whatever. I'm not making this. It's Sunday night. I want to go to bed, but I want to make this video before I get up in the morning. So let's make this video. It's gonna be posted Monday at 11 a.m. I'm not taking any trades for the entire week. And I won't trade until January 5th. It's just how it is. The holidays are around. Trading isn't going to be high volatility. It's not going to be in favor of my trading strategy. And you guys probably shouldn't trade either. And I'll say it on my Instagram and TikTok tomorrow before I post this. But if you guys didn't see that, don't take any more trades after you see this until January 5th. It's the best thing to do. Manage your risk. Just enjoy the holidays. You can take a couple days off of trading. That's all you need to do. And yeah. Today I'm just going to be talking about the indicators that I look for when entering the markets. And I'm literally just going to keep this really short. And this isn't going to be long at all. I can already name them. 1 hour liquidity sweep, 5-minute retrace, 1-minute confluence. And I'm going to also add a bonus one, which is going to help you guys, I would say, that I look for every single day in the markets. So, I mean, this week, Friday, we'll just go to Friday. It's easy, it's right here. What happened? Market opened. What happened? We had a 1 hour liquidity sweep. We had also liquidity right here. And we had more liquidity down here. What happened? Market hit 1 hour liquidity right up here. We got a 5-minute retrace. We got, I know we got a 1-minute confluence right here. And I entered right here and I ended up losing. Because I targeted this hourly. Actually, I targeted the 15. It was like right here. I don't know where it was. Anyways. This was my trade. I got a better fill. I was way up here. And I mean, I lost, but this is what I look for every single day. And here's why I lost. What happened at 7:30? We had a 115 tick move to the upside from news that happened at 7:30. It was core retail sales, and I didn't look at it, and I ended up trading, and I lost because of that, because I didn't follow one of my indicators. And Another one of my indicators is going to be this: looking at news every day. So if there's news any day, make sure it doesn't have a huge impact on the market, no matter if it's red, orange, and sometimes even yellow, because yellow will have a huge impact on the market sometimes. And yeah, I just didn't look on Friday, and it ended up in me taking such an unnecessary loss. And with that, yeah, it was just really stupid of me. Another thing is make sure NASDAQ and S&P match. So the NASDAQ and the S&P match every single time. So say when the 5-minute retraces on the S&P, the 5-minute should retrace on NASDAQ, and vice versa. So if we go to here, look at, we got market open. What did NASDAQ do? Retraced. Interesting. What did NASDAQ also do? Take out this hourly high. So what do we have here? We have an hourly high. We have a retrace right here. They're matching. It gives you more confidence when entering the trade. We can do this yesterday as well, or on Thursday. So we're probably going to have a bearish bias on this one. And maybe bullish. Okay. What happens? This happens. Bullish, bearish. We have bearish. We have bearish. Okay, so they both, what do they both do? They both take on an hourly high at market open. NASDAQ just took it out right before market open. This was the hourly high, but then took out a 15-minute high, which means we can trade. What happens? We have a retrace on NASDAQ right here. Cool. Go over to ES. We do not have a retrace on ES, so what do? NASDAQ has a retrace. We have to wait for ES to retrace. There we go. Retrace. Retrace again. That doesn't matter though. But what do we have? We have a retrace on both. And all that means is cool, I can trade now. I can have my hands off my ass, I can trade. NASDAQ already had the retrace at 845. ES had the retrace at 855. Meaning you can now trade. So before this time, oh crap. Alright. Before this time, if you would have entered after the 845 candle close on the 5-minute on NASDAQ, it wouldn't have been a solid trade to take because the S&P hadn't retraced. Sure, it's matching on the 1-minute. It's completely matching. And sure, like all the things are lined up, right? But if the S&P doesn't match, it's going to give you a lower probability to win the trade. And trading is all about probability. It's nothing else. It's literally statistics. If you have a winning probability to take a trade, what do you want to do? You want to have a bigger winning probability every single trade you enter. It doesn't matter your contract size. It doesn't matter if you're trading with $100,000 or if you're trading with $1,000. You should be doing the same exact thing. Because if you trade with 1,000, as you should be trading with 100,000, you're not going to stress the fuck out when you're at 100,000. But if you're trading with $1,000 and you're risking, say, $500 a trade, and you're like, oh, it's only 500. What are you gonna do when you're at 100,000? And sure, you're gonna be like, well, I'm not gonna risk like 50,000, because that's half my account. Like, it doesn't matter. Anyways, we need the S&P to retrace. What happens? Big old dick down. Oops. Retrace. Right here. Now we can trade. What do we look for? We look for a confluence to get filled. I mean, you could have done that. Let's see what happens. Definitely shouldn't have done that. So what do we have? We have a liquidity sweep. Break a structure. Probably not enough for me to enter. Say you would enter it right here. I have no idea, honestly. And say you're targeting this hourly low. You're probably going to get stopped. Oh no. Here's where the stopped out comes. Yep, you get stopped. Cool. What happens? I mean, we have this inverse. Break a structure. So entered right here, maybe. Anyways, that's not the point, really. The point is, wait for a 5-minute retrace on the S&P. If NASDAQ already retraced, so when NASDAQ retraced right here, S&P didn't retrace. So if you're entering, like, think of this, logically thinking. If you're entering on NASDAQ and you're waiting and you got your retrace, you got everything, but the S&P didn't retrace, like, just think. S&P follows NASDAQ. NASDAQ follows S&P. The S&P is going to have to retrace. And it's a low probability for it not to retrace. So it's like you're either going to get stopped out from the S&P retracing because NASDAQ is going to retrace again when the S&P does. Or you're going to get really fucking lucky and it's going to retrace and you'll still be in the trade and you'll win. But guess what? If you wait for the S&P to retrace, your probability of winning the trade is that much higher. It's simple. Basically, that's all I fucking got for you guys. That was a big key for me this week that I found out. And I wanted to share that with you guys because you guys deserve to know it just as much as I do. It's not my process. It's not my journey. It's our journey and stuff like that. But I deleted my drawings. 1 hour liquidity. 5-minute retrace. 1 minute confluence. Check news. Yes, follows. NAS. Wait for NAS. Cool. Write that down. That's all I got for you guys. Thank you for watching. Peace.